It is a Tuesday morning in Munich. You are sitting at your kitchen table, coffee in hand, opening your Deutsche Bank app. Your salary just landed, 2,800 euros after tax. You stare at the number. You earn 45,000 euros a year. You live in one of the wealthiest countries on earth. And yet, somehow, after rent, groceries, and your BVG monthly pass, you have maybe 200 euros left to do anything with. That is not a personal failure. That is a structural reality. And today we are going to fix it. Here is the paradox nobody talks about. Germany is the fourth largest economy in the world, and yet the average German household has a net worth of just 103,000 euros, lower than Spain, lower than Italy, and one of the lowest in the entire Eurozone. The reason is not laziness. The reason is that Germans are the world champions of saving money in accounts that earn almost nothing, while avoiding the one thing that actually builds wealth over time. But that is a conversation for later. Today I am breaking down the exact financial strategies for 3 income levels: 30,000 euros per year, 60,000 euros per year, and 100,000 euros and above. Each level has a completely different game to play. At 30K, the game is defense and foundation. At 60K, it is automation and optimization. And at 100K and above, it is tax efficiency and compounding. Let us start at the bottom. At 30,000 euros gross per year, your take-home pay, after income tax, solidarity surcharge, and social contributions, lands at roughly 1,950 euros per month. That is your entire operating budget. Rent in a city like Frankfurt or Hamburg for a single person will easily cost you 900 to 1,100 euros for a basic one-bedroom apartment. That leaves you somewhere between 850 and 1,050 euros for everything else: food, transport, phone, insurance, and hopefully a little savings. Every single euro has a job. There is no discretionary money that you can afford to lose. Priority number 1 at this level is to eliminate any high-interest consumer debt. The average German carries about 1,400 euros in revolving credit card debt, but the real danger right now is buy now, pay later services. Klarna, RatePay, PayDirect, these services let you split purchases into easy installments and they feel harmless. But stack 3 or 4 of them and you have committed 300 or 400 euros a month of your future income before the month even begins. Write down every single one of these obligations and destroy them before moving to anything else. Priority number 2 is your emergency fund. Not 3 months, not 6 months. Start with 1 month of your take-home pay, so around 1,950 euros, sitting in a Tagesgeld konto, a daily savings account. Right now, Tagesgeld accounts at providers like ING, DKB, or Comdirect are paying between 3% and 3.5% annually. That is not glamorous, but it means your emergency fund is actually earning something while it protects you. Here is the calculator moment. 1,950 euros in a Tagesgeld at 3.25% earns you about 63 euros per year. That is 5 euros a month, which sounds small until it is the difference between paying for a doctor visit and putting it on credit. Priority number 3 is your time. At 30,000 euros per year and 2,000 working hours, your hour is worth exactly 15 euros. That means any side income you generate, tutoring, freelancing on platforms like Fiverr or Malt, translating, designing, should pay you at least that, or it is not worth it. But here is what the headlines are not telling you. The highest return investment at the 30K level is not a side hustle. It is a qualification upgrade. One additional certification, whether it is a Meister, an IT certification through the IHK, or an online course in data analysis, can permanently raise your salary by 5,000 to 10,000 euros per year. That is a raise you earn once and collect forever. No amount of weekend hustle matches that. At 60,000 euros gross per year, your net monthly take-home is approximately 3,200 euros. You are comfortably above the German median household income of around 43,000 euros, but here is the thing. This income level is where most people in Germany quietly fall into what I call the comfort trap. You are earning enough that overspending does not immediately hurt. Rent gets paid. Groceries get paid. But 5 years go by and you have almost nothing invested. That ends today. The single most important move at 60K is to automate your savings before you can spend them. It is called reverse budgeting, and it works like this. The day your salary arrives, before you pay for anything, A fixed amount leaves your account automatically and goes into an investment account. Not a savings account, an investment account. At 60K, aim for a 15% savings rate. That is €480 per month going directly into a world ETF, specifically something like the iShares Core MSCI World UCITS ETF or the Vanguard FTSE All World UCITS ETF, both of which are available through brokers like Trade Republic, Scalable Capital, or Flatex. Set up a Sparplan, an automatic monthly investment order, and let the machine run. Here is the calculator moment that should change how you think about this. €480 per month invested into a broad world ETF, starting at age 30, at a conservative 7% average annual return. By age 65, that single habit produces €798,000. Almost €800,000 from €480 a month. The math is not magic. It is compounding, and the only way to miss it is to wait. The second big move at the 60K level is to understand your Steuererklärung, your annual tax return, and actually use it. Germany has one of the most generous deduction systems in Europe, but fewer than 50% of eligible workers actually file an optimized return. Werbungskosten, work-related expenses, can include your home office, professional development, work tools, and commuting costs at 30 cents per kilometer. The average refund for a worker who properly files their Steuererklärung is between €1,000 and €1,500 per year. That is money you already earned. The Finanzamt is simply holding it for you until you ask. The third move at this level is to calculate your Freiheitszahl, your financial independence number. Multiply your annual spending by 25. If you spend €30,000 per year, your number is €750,000. Write that down. Now work backwards. At your current savings rate, how long does it take to get there? If you save 20% of your income, financial independence arrives in roughly 37 years. Save 30% and it drops to 28 years. Save 50% and it is 17 years. The number that matters is not your income. It is your savings rate. And now you know yours. Here is the geographic reality that nobody in German finance content ever addresses directly. If you are earning €60,000 in Munich or Frankfurt, you are surviving. If you are earning €60,000 in Leipzig, Dresden, or Erfurt, cities in the former East with dramatically lower rents, you are genuinely comfortable. A one-bedroom in Leipzig costs around €550 a month compared to €1,300 in Munich. That is €750 per month, €9,000 per year, that someone in the East can invest and someone in the South cannot. Geography is a financial variable, and very few people treat it that way. At €100,000 gross per year, your largest single expense is no longer rent. It is the Finanzamt. Your marginal tax rate at this income level sits between 42% and 45%, and that is before you account for social contributions. At this income, every euro you legally shelter from tax is worth more than any investment return you could generate. Tax efficiency is the strategy. Move number 1. Maximize your BAV, your betriebliche Altersvorsorge, or company pension. In 2024, you can contribute up to €7,248 per year into a BAV arrangement, and those contributions are completely free of income tax and social contributions at the time of investment. At a 42% marginal rate, that is a guaranteed 42-cent return for every euro you contribute, before the money even gets invested. If your employer offers a BAV, this is the first account you fill. Move number 2 is portfolio diversification. At 100K, you have enough capital that concentration risk becomes real. The standard recommendation from German fee-only advisors on Honorarberater is to hold 80% to 90% in globally diversified equities before age 50, with the balance in short-duration bonds or Geldmarktfonds. After 50, shift gradually to 70% equities and 30% in more stable assets to protect the wealth you have built. The goal at this stage is not just to grow money, it is to not lose it at the wrong moment. Move number 3, and this is the insider insight that the financial press almost never covers. Germany's Abgeltungssteuer, the 25% flat capital gains tax, has a Freistellungsaufträge of €1,000 per year per person, or €2,000 for a married couple. That means your first €1,000 of dividends and capital gains every year are completely tax-free. Most people at this income level are not maximizing that allowance across their different brokers. Set a Freistellungsaufträge at every broker you use, and split your allowance across them so not a single euro of that 1,000 goes to the Finanzamt unnecessarily. At 100,000 euros and above, the final consideration is your retirement tax bracket. Most high earners in Germany will retire at a lower tax rate than they face today. That means contributions to your statutory pension, the gesetzliche Rentenversicherung, plus a well-funded BAV plus a large ETF portfolio gives you 3 income streams in retirement, each taxed differently, giving you flexibility to withdraw in the most efficient way. You are not just building wealth. You are building a tax-efficient withdrawal machine. The real lesson across all 3 income levels is the same. Germany does not reward people for being passive. It rewards people who understand the system. The Tagesgeld, the Sparplan, the Steuererklärungen, the Freistellungsaufträge, the BAV, none of this is complicated. It is just information that most people never act on. You now have it. The only question is what you do next. Wealth in Germany is not built by earning more. It is built by losing less to taxes, to fees, to inaction, and to inflation-eating accounts that should have been invested a decade ago. If this video gave you one number to write down today, make it your Freiheitsel. Everything else follows from that. If you want to go deeper on any of these strategies, whether it is ETF selection, optimizing your Steuererklärung, or building a BAV, subscribe to this channel. New videos every week, built specifically for the German financial reality. Net take-home at 30,000 euros gross 1,950 euro/month brutto-netto-rechner. Info. Verify for Steuerklasse 1, 2024/2025. Net take-home at 60,000 euros gross 3,200 euro/month brutto-netto-rechner. Info. Verify for Steuerklasse 1. Average German household net worth 103,000 euros. Verify. ECB Household Finance Survey. Check latest edition. Figures shift between surveys. German median household income 43,000 euro/year. Verify. The status. Maybe 44 to 46k in latest data. Tagesgeld interest rates. ING, DKB, Comdirect, 3.0% to 3.5%. Verify. Rates change monthly. Check live at Bialo.de or Verivox. Average Steuererklärung refund 1,000 to 1,500 euro. Verify. Lohnsteuerhilfe associations publish annual averages. BAV contribution limit, 2024, 7,248 euros per year. Verify. Bundesministerium der Finanzen. Confirm for 2025 tax year. Abgeltungssteuer rate 25% flat confirmed. Stable regulation. Freistellungsaufträge per person 1,000 euros per year confirmed. Raised from 801 euros in 2023. Munich 1-bedroom rent 1,300 euro/month. Verify. Immoscout 24 or Wohnungsbörse. Rental market volatile. Leipzig 1-bedroom rent 550 euro/month. Verify. Immoscout 24. East German cities rising. Marginal tax rate at 100,000 euros 42% to 45% confirmed. Spitzensteuersatz 42%. Reichensteuersatz 45% above 277k. ETF compounding example, 480 euros per month, 7%. Age 30 to 65, 798,000 euro. Verify. Recalculate with compound interest calculator before publishing. Werbungskosten commuting rate 30 cents per kilometer confirmed. Standard Pendler Pascal rate.